All right, looks like time to get this party started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday at 8 o'clock p.m. Eastern Standard Time. Before we get started, I'd like to remind you, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. What's up, my man? Good to see you. All right, let's jump right in. So obviously today was the Fed FOMC meeting. Not much was really said there. Not that we were expecting much. Obviously, just a bunch of the same BS. Apparently, Fed Powell decided that we're going to retire the term talking about. So now that we retired the second talking about, or maybe it was the first talking about, I guess in the future, maybe next month, they're going to actually talk about. They didn't say anything specifically about tapering asset purchases. I imagine it'll still be a while for that. They did not talk about the housing market and the massive bubble. Basically, it was pointless. I did not learn anything. I did not find anything new out. There was no new information. It was basically just a total joke. So, but I mean, that's what I expected. I heard a couple people, on CNBC and other networks, Bloomberg, talking about they thought there was going to be some big surprise, et cetera, et cetera. That's a joke. It's literally not going to happen. So the Fed is going to continue to, quote unquote, help the economy, which what that really means is they're going to continue to prop up all the bubbles. They're going to keep inflating the bubbles. At this point in time, don't expect anything different. And when you do, it'll be like way in advance. And they're like trying to avoid, quote unquote, a taper tantrum. Yeah, right. I mean, if you're an adult and you have children and your children want cotton candy for dinner, but you don't want to give them cotton candy for dinner because that's not what you feed children, do you do whatever's necessary to avoid a tantrum? Or do you just not feed them cotton candy? Like, I mean, it's a total joke. Like, it's so ass backwards, it's not even like surprising anymore. So, I mean, let's jump into it. So, here's our 10-year. Obviously, the 10-year had a little jump up here. Does this change the direction? Does this mean now we're going straight to the moon? Does it mean we're going down further? I don't know. I mean, there's no way to know for sure. In all reality, what should happen? Everybody should regain confidence. The market should keep going parabolic, but it's all about the interpretation. It's not what's actually said. So nothing changed. We're like one step closer to the Fed stopping to manipulate the markets, but we're like we're on like step 3 out of 100 right now. So it's like, what's the difference between step 2 and step 3, or step 3 and step 4? Like, there's no difference. So regardless, nothing has changed. Big picture, it was just, it was a complete facade in my opinion. So we still have potentially the measure move down if we break down from or the measure move of the breakdown from our little channel / wedge. We have a couple key levels in mind. Obviously, very obviously, we got a bounce off of that same Fibonacci level here in yellow, so maybe that holds. We're gonna have trouble getting back above our red Fibonacci level here in red. So in all reality, if we break above that, I would expect further move to the upside, up to our next yellow Fibonacci, up, that's our target, obviously, 2%. But if we break down from here, our next target is going to be that next Fibonacci level, which is back down here at 1.13. But in all reality, maybe we bounce the heart line. I mean, I don't think anything has changed here. This was, as far as I'm concerned, when we go sideways like this, and we're all the way up inside of the bullish control zone, and all we do is go sideways, and the oscillator resets all the way back down, that to me is a bullish reset. So typically, I would expect continuation back to the upside. So, looking at the big picture, what happened? We basically just chopped sideways in the bullish control zone, found support where you would expect to find support, called that a reaction rally, call it what you want to call it. This still looks bearish on the weekly. We've exited the bullish control zone. There's a bunch of red histograms in a row. I would expect a reaction rally like we typically get as the slope line and the histogram come into contact with each other. But, you know, what is that really going to do? It's just going to be like a retest of the breakdown. Maybe we get back up here to the red Fibonacci. If we zoom out just a little further, that's our 382 right here. You know, obviously down below us is the 236. And you'll see I have the green box for a potential target to the downside at the 0.5 in yellow, or the red box down here, or blue box down here at the red 236 Fibonacci. Neither one of those targets has to get hit. Maybe we go parabolic to the upside and hit the 786. This is a very strong support level here that we're at, basically. You know, we obviously have quite a bit of support as we have chopped around in this area right here, chopped around in the area right there. As long as we're above the 618, I expected act as support, but in all reality, the red 382 is going to be stronger resistance than the 618 is going to be support. So I do expect this more likely than not to fail and go back down to the downside. At which point in time, you know, it'll maybe look like this was our 1, that was our 2 retracement of the 1, and then now we're putting in the 3. We get the 4, our retracement of the 3, and then at which point in time, you know, we can get our 5, our 5th wave up to the upside, maybe retest like the top of the channel, you know, and at that point in time, I mean, if rates get up to like 2.5, I would just expect the world to end. So, and then if we zoom out to the monthly, you'll see that I do expect continuation on the monthly, but again, we could very easily chop sideways here for a few weeks, kind of reset the shorter time frames, but this looks extremely bullish to me on the monthly. We have officially crossed over on the TJD TDMACD. We're above the red slope line now. We're all green histograms in a row on the monthly. We've left the bearish control zone and gotten the hard buy signal. But, you know, similar to what happened there, here we had done the exact same thing. All green histograms in a row, crossed over, flipped the slope blue. You know, hard buy coming out of the bearish control zone. We got up basically to about these levels. You know, got one more push up here, just slightly higher. And then we topped out and kind of just went sideways and retested the low once again. So is it possible we come all the way back down, retest the low once again? I don't think we'll get down that low again, just because this was such a reflex rally, like such a, I mean, just a waterfall with everything that was happening a year ago, a little over a year ago at this point in time. But it's very likely that we do get like a substantial retrace, in my opinion, to find some strength, build some strength, and then we can get that retest of the top of the range. And, you know, we don't have to test the top of the range, but I think it's very likely. The last couple times we had the same signature, that was one right there. This was not the same type of signature right here, so I don't give it the same, you know, validation. You know, this was a very similar signature here, a bunch of green histograms in a row. We crossed over top of the slope line, and then at which point in time we basically went from the bottom of the channel, or whatever crazy weird pattern this is, from the bottom of this to the top of it. So again, we're here at the bottom. I would expect us to go to the top. The previous time we were at the bottom, you know, we had a retest, a retrace, but we ended up at the top. So in all reality, you know, I think eventually we do get up here to like that 2.5 rate, at which point in time, like I said, you know, I mean, the world pretty much has to end if we get up there, because things, and then also stuff. So I would expect that the apocalypse happens at exactly the 1st of January 2024, the world ends. So, all right, that's obviously a joke, by the way. Okay, so let's just switch over here. Take a look at the DXY. So you guys obviously saw the title of the stream. The dollar has officially gone to zero. I was wrong. I did not think the dollar was going to go to zero. I was obviously very wrong. The dollar clearly went to zero. That's what it means when you get a big giant green candle like that, right? That means it went to zero. Because I'm pretty sure that's what everybody said was going to happen. So, oh, wait, hang on. This just in. Big green candles. Oh, it did not. It did not go to zero. Oh, I'm sorry. I need to change the title of the stream. Apparently, we did not go to zero, guys. What's up? What's up, R-Kits? New Pathway. Good to see you guys. Yeah, it's like absolutely hilarious. It's almost like I can read charts and tell what's going to happen in the future instead of just coming on here and reporting about it afterwards. It's so crazy. It's like, if that's a thing, I need to learn how to do it, because that's absolutely amazing. So yeah, obviously we got a, you know, what I would consider to be a massive green candle, massive move to the upside, back inside of the yellow support area, bunch of green histograms in a row, getting ready to flip the slope line over, entering the bullish control zone. I guess the dollar's looking strong as of the last couple days, as we predicted. We are at the 200 simple moving average, slightly below the 200 exponential moving average. I would expect at least a slight rejection or consolidation at those levels before, potential continuation to the upside. Let's look at our longer time frame chart here. I'm going to turn all this stuff off here. You'll see very clearly on the daily, we obviously flipped over the 8 and 21. Now we are very clearly on the weekly above the 21. We, once again, we had a bunch of green histograms in a row, before that. And then finally now we have 2 more green histograms in a row on the weekly. We have officially flipped the slope line over blue. We have 1, 2, 3 drives of divergence. 3 drives of bullish divergence, basically. 1, 2, 3 right here. 1, 2, 3 right here. What happens typically after that? You get a reaction rally to the upside. 3 drives of bullish divergence. I mean, what's going to happen next? Are we going to put in a higher high than one of these previous highs? I don't know. We'll have to see. It's all a matter of how strong this actual reaction rally plays out to. We could very easily get denied here at 92. We could very easily take out this level. We have a bunch of moving averages above our head. It's going to be difficult to break through this area. 93 area right here is going to be some serious resistance. In the event that we do break through that 93 right there, we're basically putting in a W pattern. And I would expect us to get the measure move, basically from the bottom of each of the V's that make up the W to the neckline, from the neckline break to the upside. At which point in time, we'd probably be running into the 200 exponential and simple moving average. But again, from this area, you would expect extreme strength to happen. The last time we had 2 drives like this, that was very clearly bullish divergence here. And then we went into that was from February 2018. And then we topped out in March of 2020. So we went into a 2-year uptrend on the dollar after the last time we saw a similar signature like this take place. So, are we going to go for the next 2 years to the upside? I don't know. But according to the chart, yes, roughly. Switching over to the monthly now, obviously looks much more bullish as we were clearly below the 200 exponential and simple moving average on the weekly. You can see here going back to 2002. Once we basically went underneath the 200 exponential and simple moving average, we were unable to get back above them until 2014. So we spent 12 years, essentially in a confirmed downtrend with a negative slope on the 200 exponential and simple moving average. We are now basically retesting the exponential. We have pushback above it. There's 2 weeks left in this month. So if we close above it, it's going to look like a test and then potentially continuation to the upside. Often what happens in a trend, and we'll look at some other longer term charts, often what happens is you go above the 200 exponential and simple moving average, you come back down and retest them once, sometimes twice, and then you see long trending move to the upside or continuation in that direction. Sometimes you come down to them and it fails, and then you fall back through them, and it's basically just a rejection. That's definitely a possibility as well. But according to this chart, according to the fact that we're already inside of the bearish control zone, and we have been for, the last few months, I would say more likely than not, in my opinion, after this long period of a, negative slope, and then essentially, what is this right here? Would you call this a monthly bullish reset? We basically moved all the way from the bearish control zone here to the bullish control zone here on the monthly, up here. We broke through it barely, and then came back down, retested support on the 200 exponential and simple moving averages. We then essentially went sideways for months after months after months. One might even say we went sideways for years. For almost 3 years we went sideways, and here we are at the same area again. And in that time, during that 3-year period, you could argue that from back here we had a blue slope line on the TJD TDMACD. And what's that good for? Long-term trend. Keeps you from getting chopped up. So we were basically in an uptrend from, roughly back in this area all the way here. And then we ran out of steam because we can't just go up forever. So, we went into a downtrend or a sideways consolidation or what I like to refer to as a bullish consolidation, you know, and the opposite of a bullish consolidation versus, you know, just a straight sell-off is here we saw that same trend line in red right here, you know, and what happened? We just massively dumped that whole time. So that is very clearly like a bear market or a bearish trend or, you know, not a bullish consolidation. So now here, when we're in the blue, you know, we trended up, but still an internal retracement. We didn't take out the previous high, but that was clearly a bullish trend. You know, we went from essentially down here in the lows at 70 all the way up to the highs up here at 100. So, you know, roughly a, you know, 50% move back to the upside, and also retrace 50% roughly of the dump, at which point in time we then went sideways for years while this line was red, while we were underneath it, you know, that, but we just went sideways. We didn't sell off massively, but we didn't go from, you know, 120 down to 70. We didn't lose 50% during that period of time. So here we went down 50% during, you know, that sell-off during the red trend line. Here we went up 50% during the blue trend line, you know, with the exception of a couple little dabs here along the way. And now here we are, you know, potentially ending that trend, and all we've done is basically just go sideways. So, you know, if the 200 exponential and simple moving averages hold, if we bounce the bearish control zone down here, if we get one more green histogram in a row and start to move back to the upside, I would expect us to come up here and potentially even take out that previous all-time high. So we'll have to see though, you know what I mean? It's not a guarantee. But again, here we had a very clear bullish trend and we went up. We had a very clear bearish trend right here when it's red, and we went down. Then we had a very clear bullish trend right here in blue, and we went up. And now we have something that we have not seen on this monthly chart before. We have essentially a red trend, which is technically bearish, but instead of selling off violently to the downside, we just went sideways. So that, my friends, is what I would consider a bullish reset. We are resetting the indicators and oscillators while the price action basically goes sideways. What are we doing during a bullish reset? We're like that jet flying up in the air, okay? We're getting ready to keep flying, but we're running low on fuel. So what do? We rendezvous with that big old fuel jet in the sky. You know what I mean? That giant like blimp or whatever it is, the one that's full of fuel, so we can refuel. We're refueling in the air instead of coming back down to the ground and landing and grabbing up some fresh fuel. We're refueling in the air. So that's what happened. This is the ground. This is our little aircraft carrier where we got fuel last time. Okay, we took off. We're way up in the air now. Oh, we need more fuel. We're running out. Should have got a bigger fuel tank. Okay, but we don't have any more fuel. So what we're going to do, we're going to rendezvous. We're going to grab up a little more fuel. And then what are we going to do after that? We're not going to come back down and land. I mean, that doesn't make any sense. If we were going to come back and land, we'd be doing it. We would have done it already. Instead, we're going to rendezvous. We're going to refuel. Okay, and then boom, we're going to take off again, in my opinion. But I mean, it's not financial advice. I'm not your financial advisors. Markets are extremely volatile. Please do your own research and trade responsibly. And keep in mind that according to literally everyone else on the entire earth, every other person on the entire earth, even some aliens that we have made contact to, they literally sent us a message, okay? And they said the dollar is going to zero. So just remember that. So if you believe the dollar is not going to zero, it's literally just me and you. Okay, because everybody else is so sure the dollar is going to zero. But I mean, you know, maybe I'm just a contrarian. Or maybe the chart is saying it's not going to zero. But I don't know. Maybe I'm wrong. I doubt it though. S&P. So I thought that was like absolutely hilarious that we just got like that parabolic like little jump up. I really think it's funny. It's so weird. I have never seen so many people agree on one thing so sure that the dollar is going to zero. It just absolutely blows my mind. SPY, you know, really all these markets look the same. We had a pretty violent sell-off. It's nothing crazy. I mean, we took out like a week. At this point in time, this is a market crash to me. We had like 5 days in a row of new all-time highs, and then one day of not putting in all-time highs. That's a market crash. I mean, right? We have very clear bearish divergence on both our indicator oscillators. We have now taken out the high here. So what do we expect to happen? Some kind of sell-off. How deep is it going to go? Is it just going to get bought back up? I mean, probably, let's be real. We'll probably bounce some of these moving averages. Maybe we get the retest again of that red trend line. But, you know, unsustainable. Dow Jones Industrial Average looking slightly more weak or less strong. Same thing. We have multiple drives of bearish divergence. Here we have a high. Here we have a higher high with a lower high on our indicator oscillators. That is, you know, our first 2 points, our first drive of bearish divergence. And then once again, we have another point right here with a lower high on our indicator oscillator down here. That is our third drive of bearish divergence. These are two different types of bearish divergence. Here you have a high, and here you have a higher high. Here you have a high, and here you have a lower high. That's one type of bearish divergence. Here you have a high, and then the same high. Here you have a high and a lower high. Once again, that is a different type of bearish divergence. You can research all the different types of bearish divergence, you know, like hidden bearish divergence or bullish divergence. But the fact of the matter is, it doesn't matter. The whole point of the divergence is not what type it is or what fancy name it is. It's to just give you a clue that the trend is unsustainable. And obviously the trend is unsustainable. As far as I'm concerned though, the Dow Jones has been operating inside of, you know, basically this red resistance and blue support line right here, with the exception of a couple little dabs outside of it. I would expect it to continue operating inside of that range, you know, until it doesn't. If it does break that range, which in my opinion, it eventually will. Actually, it's a fact. Eventually it will. I mean, even if it goes sideways for like 20 years, eventually it'll break it. I would presume it would break to the downside. Take us down here like 32,800. Maybe, maybe not. I mean, who knows? If it breaks the upside, it'll take us up to a new all-time high. Okay. IXIC, Nasdaq, okay. So, you know, once again, chart did exactly what we expected. You know, we have a high, we have the same high, we have a third high, you know, basically the same high again. You know, once again, bearish divergence. We have a high here, we have a lower high here, we have a third lower high here. Could we, you know, rally and then just go parabolic from here? 100%. If we do, we would get the measure move from the bottom of the triangle to the top of the triangle. That's like the conservative way of doing it. Alternatively, you could do the flagpole. You could just do the whole flagpole from back here if you want, and just say we're going to like $100 trillion. I mean, you can do whatever you want. You can just draw all over the charts. You can draw smiley faces, fish, whatever. It doesn't matter. But yeah, in all reality, this is a bullish pattern. You would expect it to break to the upside. But based on the bearish divergence and the unsustainable nature of the markets and loss of confidence, I would say more likely than not, we are probably headed back down to like that 13,450 range. But again, markets only go up. Stonks only go up. The old Russell, the Ruddy. It's just, I mean, it's going sideways. Got the hard sell signal. Multiple red histograms in a row. We're inside of, I mean, we're sort of inside of a pattern here. It looks like we're getting ready to break and roll over. We'll have to see what happens with that. I mean, I'm not bullish on any of this stuff. I think we're realistically topping out on a lot of these markets. Now, could policy or, you know, Fed action or manipulation or whatever change any of these things? 100%. ICLN, you know, technically we have broken out of our little pattern here. We're now above our purple resistance. We're now above our red resistance. You know, at which point in time I would expect basically our measure move to step in here. I'm not convinced though. I'm not convinced. I do like that we're staying on top of the blue slope line. I do like that we're selling off, but basically just going sideways. I don't have to remind you guys, but when the indicator oscillator goes sideways or down while the price goes, you know, down while the price goes like sideways or slightly down, what is that? It's a bullish reset. So in my opinion, this is probably going to be something that I'm looking at this week for a potential entry. I really would like to see this thing test back down to the downside one more time, just to find support at a higher low. You could argue that this was our test right here. I don't love it, but to tell you the truth, I mean, it's no secret, guys. I've been having trouble finding places to deploy capital because the majority of these markets look like shit. I was telling you that on Monday, which would have been Sunday, but I prolonged it a day. I've been telling you that for a couple weeks now. These markets do not look great to me. They don't look great. You could argue also, though, that the longer we just go sideways at the top of the trend without selling off, the more likely we are to go up. That's like a really, really short-sighted view. Because if we start flipping over these charts to like our weekly and monthly, most of them look absolutely horrendous. They almost all are starting to show like serious weakness or divergence on at least like the weekly. So XLE energy sector looks good. This looks strong. One of the strongest. We closed above the previous high. Did not get down to our re-entry point right here. I do still have part of the position open on this, but again, I'm not going to chase it. I think it's very high likelihood we get up at least to that 57.40 range, but potentially top out there at least for the time being. XLI, we spoke about the weakness in this, the industrial sector. I feel like this trade has been way overplayed. God knows when we will ever pass an infrastructure plan or anything, especially now after the Democrats got in trouble for all the bullshit that they pulled. So we'll see what happens. It's going to be a lot harder to get anything done. The longer it takes to get it done, the less likely it's going to be to get it done. So, I mean, but that's government for you. So, they all still get paid. That's all that matters. We have a high here. We have the same high here. We have a high here. We have a lower high here. Bunch more bearish divergence on the industrial sector. We have now crossed over the 8 and 21 to the downside. We did that previously. We kind of saved it back here. You could argue that we still have a chance to save it. So that was back in December. We definitely got the cross back here in February. So we'll see. If cross back to the upside, maybe there's potential. But again, weakness. XLF, I argue fundamentally and technically that the financial sector looks like shit. If everybody is right and they come out with the Fed coin, this sector will absolutely die. If everybody is wrong and they don't come out with the Fed coin, this sector is very likely going to die. There's not a lot of strong arguments for like traditional banking and stuff like that. Now, in the event that things normalize, okay, and banks start loaning money again and things go back to normal, like maybe I'll change my mind on that. But right now, the two main things they're doing are trying to give people like that don't need money, like people like me, they're trying like super hard to like get to take loans out and stuff like that. And then the other side of the coin is they're trying to basically like extend credit to people that have no previous credit. So if you can't get people that you think are going to pay you back to take money, if the next best alternative is to try to find people that have no credit history whatsoever and try to give them money, yeah, maybe you're inflating the bubble a little further, but it doesn't seem likely that that's sustainable once again. So, and again, we have very clear bearish divergence. Looks like it's going to sell off. So, I mean, it is selling off. 8 and 21 have crossed now. So I would expect a reaction rally, at which point in time, next target is potentially back down here, $35. Looks bad. Utilities look good. They look strong. We did not hit my target. We fell just shy of my target. I mean, this thing doesn't even move. Like, in all reality, like, it really doesn't move. That was a 3.6% move from our entry to the top there. Didn't quite make it. This looks like indecision to me. I don't know. You could call it bearish. I mean, we just like completely wiped out the last 4 days of price action in a single candle, and basically like the whole move looks terrible. XLU looks terrible. But I mean, I don't know. Maybe we find support here and continue to the upside. It's hard to get bullish on something after it does this. Like, because here you think, well, that's it. It sold off. This is a good buying opportunity. And then you get hit by that right afterwards. So, I don't know. It looks bad. Oil actually showing some weakness. That was like basically like 2 weeks of, almost a month. I mean, I don't know. What is that? A few weeks now of nice, strong upside moves. We were expecting this. We're at the top of the range, getting the hard sell signal. 2 red histograms in a row. We'll see what happens though. I think oil stays strong. If we start to see more of a sustained trend like this, a couple more days of weakness, I think this is going to happen next. But if we just kind of go sideways, start to show some strength back to the upside, I think there's a strong argument that oil will stay strong through all this. But again, there's not a lot of stuff that looks tasty at these price levels. So we could do tech next. Tesla did exactly what we expected, came back down, still inside of this flag. There's nowhere left to go. There's literally nowhere left to go. We're inside of the point of the tip of the flag. The next thing to do is get shot either to the upside or to the downside. We now have the hard sell signal. We are basically losing the blue slope line right here. This looks good. Honestly, no, it does not look good. It looks terrible. Honestly, I'm probably going to get out of this position right here at break even. If we start showing strength again, I will gladly just buy back at a higher price. This looks weak. We're right in between basically our upside target right here, and we've gone sideways so long that in all reality our upside target is like 660. We never even got close to that 700 target we were potentially expecting. So if you say there's another, we're at 600, another $60 to the upside, 10%, there's definitely a possibility. But if you look at it as from 600, are we just as likely to go down to 540? Honestly, yeah, I think we're dead smack in the middle of a range, and this still looks like a bearish pattern to me. So I think we're more likely to see further downside than we are to see upside. So at this point in time, I'm just not interested in this. And to tell you the truth, I'm no longer interested in my position in Tesla. Pinterest. Pinterest could have some follow through here. It held fairly strong. It's above all the moving averages. I still think there's a high likelihood we come up here to that $80 target. Another like 15% to the upside. But again, from where we're at right now, we're basically in the middle to the top of the range. So there's no entry points here. And we are also, potentially rolling this over. Could be printing some bearish divergence here between those 2 points. We'll have to wait and see. We're not seeing the same thing on the TJD, TDMACD, so we could easily see follow through and validate this. And it ain't no thing but a chicken wing. But again, I'm more looking for entries and exits at this point in time, and I'm not seeing a lot of entries. eBay does not look bad. We basically did what I was expecting. We got the breakout to the upside, came back down, got the retest. So far it's holding. Basically we've got, that first test of it, a second test, like kind of indecision, and then a little bit of bullishness. We did actually flip over the parabolic SAR red. The last 2 times we had that happen, we topped out and sold off pretty violently. Topped out and sold off pretty violently. It's possible we get like a little signature like this where we sort of like print and then see a little more follow through. So there's definitely still a possibility for this. But to tell you the truth, I really don't like buying when we're all the way up at these levels. Even on a confirmed breakout, I really don't like it because this looks like it's just going to be a throw over. And we were very close to just leaving the bullish control zone, getting the hard sell. We have multiple days in a row of red histogram. It's very hard to get follow through when everything's like already exhausted and you're out of gas. So if it goes sideways long enough, starts getting that bullish reset, that keeps coming up. If we start getting that bullish reset, maybe we could see that continuation and this trade setup will look good. But right now, to me, it kind of just looks like it's going to be a throw over. So we'll see. PayPal looks weak. Hard sell. Leaving the bullish control zone. We're printing a red histogram here. We've got a couple red, bearish candles in a row. We ran into that same level at the 618 for like the 4th time. We got rejected here at that level. We got rejected here at that level. We got rejected here at that level. And then we got rejected here at that level. So it's possible we find support here and we can get that follow through. But as far as I'm concerned right now, this sort of reminds me of the gold chart. We were looking at like the gold chart from its previous all-time high and then comparing it to like its current sort of like consolidation. And it had like that little parabolic move here and then a resistance, and then a resistance again. It was like a triple top after the new all-time high. That's what this looks like a lot to me. So does not look great. Does not look good. Bumble's holding for now. Got the 821 cross to the upside. A bunch of green histograms in a row. We haven't quite got to the bullish control zone. So I think basically this was a reaction, rejection off the 50-55. As long as we hold the 821 here, I think we still get that follow through and that move up to $57. At which point in time, I'm realistically looking to exit my position, or at least a large portion of it, at least 50% of it. I didn't even put a second target in place. This is the only target that I had in mind the entire time. If we consolidate here long enough and break through it, maybe I'll get bullish. I will probably just rebuy. But in all reality, I would rather just take profits on my whole position right here and then buy again higher, because there is so much resistance above our head. Once we get up to this blue line here at like 57.50, all we have is resistance at that level. All we did was just bounce that same level over and over again. I would rather just take my profits off the table here and then wait, and you can put that money to work somewhere else. You can do nothing with that money, but you're de-risked. And after some nice profits, which will amount to 42% moves to the upside, I'd rather just lock those in, honestly. But again, you guys know I'm conservative, so. Baidu, this is looking worse by the day. It really is not looking great. There's definitely a possibility that we rally from here. I'm looking for if we can get a little more of an aggressive move on our indicator oscillator here and maybe take out, the low on the Stochs, but maintain it here. We can see a little bullish divergence and maybe a bounce back up, but we're not able to get back above the 821 right now. We'll have to see. I'm not ready to just like run from this position quite yet, but this looks like there's a possibility. It's definitely going to be a failed trade. It's still a bearish pattern. This is a good example, though, of what we were talking about earlier. Where basically we're in a long downtrend, well below the 200 exponential and simple moving averages. Okay, we finally try to break above it, get rejected here, break above it, find support, and then we go parabolic. So that's what I'm paying attention to. Are we going now to do that on, obviously we did it here, but that's like that move that I'm looking for, where you break above, retest it, kind of consolidate, and then just go absolutely parabolic. And that's like your change of trend. This area right here is my absolute favorite time to enter into a market. It's when I confirm that we have now entered a bull market on that time frame. So, is there a possibility now that we come back down here, retest the 200 exponential and simple, and then break down from here? It definitely is. At which point in time I would say we've entered a bear market. And we're very close to entering a bear market now. The 200 exponential and simple are both like flat slope, almost to the downside. So, that's basically like very close to confirming, a downtrend, or at least a consolidation that could be elongated. But we'll have to wait and see. The best thing to do when you see a situation like that and you're curious is flip over to the longer time frame. And we'll see when we flip over to the longer time frame. This is our weekly now. This was our 2018 to 2020. Yeah, 2018 and 2020. So for like 2 years, we were in a bear market underneath our 200 exponential and simple with a slope to the downside. And then we broke above them and went parabolic. So now you could argue that this is just the retest before we go into a weekly parabolic uptrend. We have the 200 exponential and simple as like flat slope right here. So if we rally from here, if we find support from here, and, we're obviously very tired on the indicator, way down in the bearish control zone, we could see further downside from here, something like this, another sell-off. But at some point in time, we're probably going to rally or at least reset from this area, and it's going to be a nice aggressive move to the upside. So, and then, just for shits and giggles, we can flip over to the monthly, and you'll see we got the 821 crossed up to the upside. We're down below now, the 8, basically trying to buy this support. We have a cluster of moving averages below us. We're showing some weakness, but overall in an uptrend. So we'll have to see. I mean, this just looks like we're retracing that first wave. This was like a really big wave, a nice little retrace of that wave. And then we'll see, do we get continuation to the upside? We're basically down at the 50%. So could we sell back off and go further down to the 618 or something like that? We definitely could. But, we already said with basically with Baidu and Alibaba that we're sort of like quote unquote taking a stab at picking the bottom, and I still feel the same way. They both look relatively weak, but good zones to buy from. This to me is like a nice support zone, a key Fibonacci level. But again, bearish pattern overall. I don't typically like to pick the bottoms, but I was looking to diversify the portfolio a little bit into some foreign stocks. But we'll have to wait and see, man. We're seeing like a bunch of defaults in China. China has already essentially, they're like a couple months ahead of us as far as like, pulling like all the, they didn't do the same stimulus. They didn't do the same like bailouts and everything. but essentially they did like their version of the same thing. So they're feeling the pain over there right now. We're going to be feeling the pain, I'm sure, in a few months here in the United States, and probably the same thing for Europe. They're like slightly further behind. So you would say that like whatever happens in China, all things the same, whatever happens in China, a couple months later is probably going to happen in the United States, stock market wise or economy wise or whatever. And then a couple months after that, probably the same thing in Europe. So, most of these things act the same. NEO still looking pretty strong. Saw a little bit of a pullback. Didn't quite hit our target yet. Again, we sort of missed the entry on this one by a couple bucks. It sucks, but it is what it is. I'm still not convinced this doesn't come down lower eventually. We're getting the hard sell signal now. Couple red histograms in a row. If I did make it back into this trade, I would be definitely moving my stop loss up and potentially, looking to get taken out. But we are above the 200 exponential and simple. They both have move, slope to the upside, and we're above all the moving averages. We have quite a bit of resistance above our heads. So we'll have to see. Does this thing kind of just go sideways and get that bullish reset? Does it sell off aggressively? We got to wait and see on this one, but definitely one of the stronger. It's one of the stronger of the weak stocks. Peloton, yeah, I didn't expect us to get back up above that $100 range. We made it up above, found support. We're back down at the support again. We'll have to see if this thing holds. It still looks like shit to me. We're basically just hanging on to the 200 simple, 200 exponential moving average. We got rejected when we tried to get above the 200 simple. I still think this thing has downside potential, but we did save the head and shoulders. Yeah, we'll see. We'll see. I don't like it. Apple showing a little strength after just basically going sideways for the last few months. We're up at resistance now. We've got one touch here, a couple more touches here, and here we are again. More than likely, in my opinion, we just get rejected here. But if we do start to break out, start to show some strength, we could easily see some continuation. Typically, when the slope line turns blue like this and price action's below the slope, it typically gets rejected and sells back off. We also got the move all the way back up to the top of the range. Saw a nice, strong knife stab. And when I say a strong knife stab, let's look at this. Here we got like somewhat knife stab, like kind of strong here. Here we got like what the knife is supposed to look like. This is a decent one right here. Powerful, pointy. This one sort of is like a little head and shoulders knife stab. Decent. This is like what you really want. The super aggressive, like super pointy, like straight up parabolic to the upside or downside. Typically that means like, we're exhausted. So I would expect us to either consolidate here and then eventually get the break or get rejected and come back down and retest this 122 level. So, but again, I'm not seeing anything too strong over here. Except for that big green candle on the DXY that just went to 0. All right. Jump over and chat real quick. Grab a drink. What's up, Anthony Ramos? Good to see you, my man. Good to see everybody today. How's everybody doing? Let me know in the chat. Let's see that hype in the chat. What are you guys looking at this week? Anything looking good to you? Where are you deploying your capital at? What are you taking profits on? All right. Bitcoin future chart. All right. So we obviously know the futures chart tends to tell the truth a little more accurately. The spot market tends to be a little more bullish. So the futures chart, we got a nice reaction rally off the 200 simple. We're able to hold above the exponential pretty good here, the brighter blue one. Got a second rally and did not close below the 200 simple. Got a nice move up here. Rejected on the 21. We are now consolidating between the 8 and the 21. A bunch of green histograms in a row. Nice hard buy signal coming off the bottom of the range. Do I still expect a move to the upside? This could break in either direction. Let's be real. It could break in either direction. I think more likely than not, it breaks to the upside. And when it does, if it does, I think we break up to about 45,000. So that's my opinion. But technically here, that's really just going to look like our shoulder, head, and then our next shoulder. So longer we go sideways here, the more I'll say that it's invalidating this pattern. But the truth is, that's literally just my opinion. I think we cross this over. I think we flip the slope back over. I think we get a little push up here, and then I think it's a liquidity event. I think it gets sold into. Maybe we get back up to 47.5. It's going to be very hard to get above all this. This is, I mean, you could say whatever you want through this whole range right here. This is all selling. This is all selling. It was basically just smart money selling the top. So we'll have to see what happens. You know, see how it plays out. But again, I think short term, I'm bullish. Long term, though, it looks very bearish. The weekly chart looks absolutely horrendous. We have crossed over the 821 to the downside. The last time we crossed the weekly chart, 821, was back in May of 2020. So, you know, we got a nice over, what was that? Over a year of, you know, upside potential. Nice year, nice parabolic uptrend. You know, we basically went from 8,000 up to like 60,000. So I would say like an 8x is pretty good, and we're probably due for a retracement. Could we go sideways here for a little while and see, you know, a bullish consolidation? For sure, I definitely think we could. But the likelihood of us just dropping sideways here, excuse me, is less likely. I think more likely than not, I think we're coming down lower. Next moving average would be the 89 basically, or the 50, which we just barely front ran. So that's like 30,000 to like 26,000. We've also got a gap back here from that 26,000, 24,000 range. So do we come back down and fill that 24,000 gap? Yeah, I think we probably do. If we see more downside potential, I think we probably do. But we'll see, man. Maybe Michael Saylor can borrow enough money to prop up the entire Bitcoin market on its own. Maybe Elon can tweet out a couple things and save us all. Monthly chart. We don't have a ton of history on the monthly, but the last time we saw this was when futures was introduced. We then sold off for a year. This was the CBD scare. You know, we basically, by the time it printed, by the time it took out the green parabolic SAR, you know, we had already rallied back off that. So we'll have to see here, but we just flipped it over red. We took out the parabolic SAR to the downside here. So, you know, if we can close above the 8, we have a better chance of continuation to the upside. But I think more likely than not, we have 2 weeks. Okay, in my opinion, we're more likely going to get a push up to like 45 or so, and then a rejection, and then sell off. Or we already got our push and it was just pathetic, and then we get a rejection and sell off. But I think in all reality, that 21 down here is our next target, like 26,000 for like the long term. We have left the bullish control zone. We are very close to getting a hard sell signal for the first time ever on the monthly futures chart, only because we don't have a ton of history. And we have 2 months now of red histograms on the TJD, TDMACD. So short term, I'm still neutral to bullish. Long term, bearish. Long term, I'm bearish. Bitcoin, our regular chart, the old spot market. You know, we bounced the 377 1, 2, 3 different times, bounced it a 4th time right here. You know, we're crossing 821 back to the upside. On the futures market, we're chopping around between them. So this, once again, more bullish, even though we are below the 200 exponential and simple. So again, you could argue that we're more bearish, but you know, I think we're showing more strength on this for a potential move to the upside. You know, left the bearish control zone, got the hard buy, bunch of green histograms in a row. Flip the slope line over blue. We have not done that yet on futures. So again, more bullish. But we'll have to wait and see. You know, you could argue that, you could argue that this is a ugly pattern playing out right here, but that this is some sort of like a left shoulder neckline, head, neckline, right shoulder. But once the shoulder takes out the head, it's hard to argue that. You could also say it's some sort of weird like Adam and Eve pattern, bottoming pattern. You could say it's like a W, and that once we took out, like, you know, this was basically a V, 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 the old triple V, the flying V, the mighty ducks. I don't know. It's whatever. I don't see anything clear cut here. I think there's definitely a possibility for some upside potential. But again, the daily looks decent. The weekly looks bad. You know, the weekly here looks like a clear rejection on the 821 cross. All red, the bearish divergence signal, leaving the bullish control zone. We have flipped over the red slope line here. So weekly looks like crap on spot market. And monthly looks exactly the same. We're just below the red. We now have flipped over the parabolic SAR. We have 2 red histograms in a row. We are left the bullish control zone, and we are about to cross the Stochs to the downside. There's much more history here. But in all reality, I mean, it looks rough, guys. Let's be real here. It looks rough. Looks like we look like we're gonna retest like 26.5. If I'm wrong, we got plenty of time to figure that out. I definitely do not think now is the time to make like hasty decisions and buy the dip. But that's just my opinion. And obviously not financial advice, because the dollar's going to zero. Ethereum looks pretty weak, man. Looks pretty weak. We had a decent chance for like a push up here. It's basically just going sideways though, waiting on Biddy to do something. I don't think much is going to happen in the rest of the markets, crypto-wise, until Bitcoin does something. We have the divergence signal. We have left the bullish control zone. We have the hard sell signal, obviously. We have the parabolic SAR on the weekly. We have a bunch of red histograms in a row. We've gotten rejected very clearly off of the 8. We're still above the 21, so technically this is stronger than Bitcoin. Next target, if we do sell off, and we have a decent amount of support here based on that close, next target is $1,500. So not great, but looks better than bid A. Looks better than the shitty bid A. Monthly does not look good. It looks like we're about to leave the bullish control zone and get the cross to the downside. And the last time that happened on Ethereum was back here in 2018. And, you know, we were, let's go from where we're above it. It was at 565. And let's remember where we were buying at was like $80. So it's a lot of damage to your wallet if you're holding that Ethereum. But I mean, if you've got diamond hands, by all means, you might as well lose 90% of your money. Especially if you have like tons and tons of money and you don't have to worry about buying other stuff with it. Might as well just diamond hand it up. Old, I'm hodling. XDG, the old doggy coin. There's like no strength on this thing. I think there's other meme stocks that are more fun right now than the crypto meme stock. So if we go to the weekly, I mean, we're not going to get anything. We're so far above the moving averages that it's like pretty much useless. Divergence signal, top of the range, bunch of red histograms in a row on the weekly. Monthly, we're not going to be touching anything. We're like still so far above the 8. If we come back down and just touch the 8, you know, these candles look horrible. This is clearly a rejection candle. This is clearly a rejection candle. You could argue they're indecision candles, but more likely than not, I think the old doggy coin's going to 18 cents. So the old Doge. The old Doge and chain. BNB, man, we'll have to see what happens with BNB. The old trade setup from back here is looking pretty juicy right about now. Damn, did I ever call the top on the old BNB coin. We're retesting the 200. We touched the simple perfectly, touched the exponential perfectly a couple times. We're well below the 8 and 21. They are very well crossed to the downside. This thing looks weak. It is possible that, you know, we see a rally if we cross this back to the upside. It looks weak right now. But again, all this stuff is just going to go sideways to down until Bitcoin does something. We might see some little micro rallies here and there, but, you know, here we got buy, sell, exit, and it kind of went sideways and then went up. Here we got the buy, sell, massive dump. We're in between the 8 and 21 on the weekly. Bunch of red histograms in a row. It's not going to tell us anything differently. We are still well above the 8. The 8's down here at 286. The 21 is down here at 158. We're at currently 351. We left the bullish control zone. Still got a little time before the cross, but That's a hell of a knife right there. BNB looks weak. BNB looks weak. When the strongest coins look weak, we're probably in trouble. And when I say strongest, I mean like Ethereum, BNB, and Chainlink were three of the strongest cryptos consistently throughout this entire bull run. And all three of them look pretty weak. So we are well below the 200 exponential and simple moving average. We bounced the 377. We bounced the 528. It's like there's a reason I use these moving averages. It's absolutely crazy. How lucky that they were in the exact spot where we rallied. That's total luck. You'll see here, we clearly bounced 50 and 55. Have not closed below it. We're seeing some serious rejections here. About to get the 821 cross to the downside. Hard sell, left the bullish control zone. Bunch of red histograms in a row. About to flip the slope line back over to the downside. Next target, if we break through here, $12.75. We're at 24 bucks right now, basically. That's another 50% downside. I mean, this looks rough. This looks rough. You know, if we close this monthly below the 8, I mean, the 21 looks juicy. That's right there again. It's that same spot. There's not a ton of info to see here, but, you know, it is what it is. At this point in time, you know, profits should be locked in. Lambos should be purchased. Bills should be paid. Wives should be upgraded. You know, anybody that's just hodling at this point in time, there's another bull run coming around, but I mean, you're really just gonna hold through it, give back all your profits, just wait it out. I guess, man. I guess that's what diamond hands are all about. I don't have diamond hands. I don't have it. I would rather have money in the bank hands. I would rather have profits locked in hands. What's the symbol for profits locked in? Is that a different one? I feel like diamond hands, it turns into like the praying hands. You start off with diamond hands and you say, I'll never sell. And then you eventually become praying hands and you're like, please God, let this be the bottom. All right, Bitcoin dominance. Looks like we're getting that bounce. Looks like we're finding support right here. Two weeks in a row now, green histograms. Hard buy signal coming out of the bullish or bearish control zone. I think we get follow through. Next target, 52%. It's going to be tough to get above 52%. There is a ton of resistance here. Ton of resistance all through here. And then the 21. 52% though is definitely the target. Total market cap. Looks like we'll probably, what did we lose? About $1 trillion already? 1.6 from like 2.6. We're down about $1 trillion. It's not bad. $1 trillion in lost value out of we got about like 1.6 trillion left, so that's good. Sell by sell, left the bearish controls or bullish control zone, bunch of red histograms in a row. Could not rally off the slope line. We stay under it long enough, it's going to flip over. We're in between the 8 and 21 at the bottom of the range. We got 4 days until we just get that breakdown. Next target on crypto cap, oh my gosh, 1.13 trillion. Wow. That's another 400 billion of lost value. That's not bad though. 400 billion of lost value. If I don't know, maybe Michael Saylor steps in with his 500 million and saves the crypto space 400 billion. Maybe Elon does it. What's Elon's net worth? If he goes all in on crypto right now, he could save us. He could save us all. Looks bad though. Looks bad. The old Coinbase. Well, if you didn't get into this trade, you still got a chance. I don't know though. I don't know. Like I said, I don't love this trade right now. I don't hate it either though. Still a bunch of green histograms. We are getting a hard sell signal. Below the 40 zone. Yeah, we'll see. I mean, look, in all reality, my honest opinion, if this holds, we probably get the breakout and continuation. If it doesn't, it's going lower, at least down to retest 220 or 207. I have not made up my mind on this one. I mean, the real question is at this point in time, just get out, break even, and wait for a better entry or some confidence in the space, or just hold it and go. I don't hate it. I I'm more likely to not make unnecessary trades. So I'm not going to re-enter off this potential support for a breakout. But we couldn't even hold. I really want to see this thing get above the 8 and hold it, or at least above the 21. Um, at like 240. We're at 230 now, though. So we'll wait and see. I don't love it, though. But I don't love any of last week's stuff. I mean, I felt like we were really itching to try to find somewhere to put our money. Riot. Been a while since we took a look at this one. People are getting super bullish on it again. It had a nice move off that $20 move. Up like 50, almost 75%, something like that. Definitely a nice move there. But we're at resistance. We have 1 resistance, 2 resistance, 3 resistance, floor. So, I mean, are we going to fall back down here? 1 support, 2 support, 3 support. Are you ready for Riot to go to $16? I mean, it could happen. We're above the 200 exponential and simple. It looks okay on the daily with the 821 cross to the upside. But when we flip over to the weekly and, we got the blue histogram, switch, all that, it looks decent. But when we flip over to the weekly, it just looks like a rejection. We'll see if it holds, though. We pushed up. We're like trying to cross the 821 back to the upside. But this is looking like a rejection. 2 days left coming out of the bearish control zone. Showing a little bit of potential green here. Is this going to be the bottom, or is this just a reaction rally and then we just roll back over? Only time will tell. But I mean, like, everything looks weak right now. Even stuff that I'm macro bullish on looks weak right now. I think that, I hate to say it, but it really feels like the market's getting a flat tire. Like, I don't want to say the bubble's bursting, because it's not like a hard burst, but we're definitely leaking some air. We're definitely leaking a little bit of value, if you know what I'm saying. MicroStrategy, breakout, consolidation, continuation, maybe. I don't know. I'm not a huge fan of Ponzi schemes, scams, or Michael Saylor. So for me, this is a triple no. But there's definitely potential for a measure move up to like $900. But I think a lot of people probably just got bullish on this, thinking, oh, well, the stock has to go up because they're going to buy another 500 million worth of Bitcoin, and don't realize that, like, he formed MicroStrategy LLC and then all the new Bitcoin goes there instead. So I don't know. We'll see. We'll see. GameStop looks bad under the 821. Looks like we're getting ready for that cross to downside. We got the sell by sell, divergence signal, capitulation dump, a bunch of red histograms in a row. The old diamond hands. Well, we'll see. We'll see about your diamond hands. Next target, 195. After that, 172. After that, 116. After that, 93. After that, 0. I don't know. I mean, we got a high, we got a low. We got a lower high. We got a higher low. It's a giant flag. So the real question is just, what direction is it going to break in? I do not know, nor do I really care. AMC, the old apes. Well, let's see. Last time there was a parabolic run, it gave back most of it, consolidated, and then eventually, after a flag, it put in a new all-time high. So maybe it does the same thing again. Consolidate, flag out, new all-time high. Looks more bullish. We're still above the 8. Stay up here long enough, and maybe the apes get their bananas. Or is that monkeys? I think monkeys eat bananas. The apes still eat bananas? I think they do. Bed Bath & Beyond, another one of those meme stocks. This thing, basically has a parabolic run, capitulates. Parabolic run, capitulates. Below the 8 and 21. Looks bad. DraftKings. Got that sell-off I was calling for. Literally got like a capitulation dump. Closed the gap. I heard Cathie Wood bought like $40 million worth. So this is like the Cathie Wood pump right here. That's what $40 million worth of Cathie Wood buying does. we have the hard sell signal leaving the bullish control zone, a bunch of red histograms in a row. So I think, I mean, we're below the 200 exponential and simple moving average. Let's be real here. At what point in time does the market admit that Cathie Wood does not understand technical analysis and that she can't just bully the market into doing what she wants, like by buying a bunch of something and then publicly announcing it? I think probably another like 25 to 50% drawdown in her funds, and people will start admitting it. I like it. It's a good strategy. Elon Musk, Michael Saylor are really good at like pumping stuff up and telling people they're buying it to get follow through. Cathie Wood's been kind of doing it lately, but I think the old wood bubble is popping. But we'll see. We're below the 8 and 21, about to get across the downside, below all the 200, all the moving averages, but the 377 down here. That's Cathie Wood's $40 million plus whoever else jumped on the train. I think it gets rejected and sells off further. We got a decent amount of support down here at $35. Decent amount of support down here at $38. We'll see. It looks like a nice bullish candle, but what did we really do? We just closed the gap. Close the gap. Mind the old Cathie gap. Cathie closing the gap. I was wondering what that smell was. Let me jump over here in the chat real quick. Bubbly says, I wonder what happened with the Perth Mint coin. What happened with the Perth Mint coin, dude? I didn't hear anything about that. I've heard a lot of FUD about the Perth Mint, and I do own some Perth Mint products, but I have not recently heard any FUD about the old Perth Mint. Anthony Ramos says, or Ramos, I'm not sure which way you pronunciate. He says, what do you think Ethereum is going to do? Promising future. I think the future of Ethereum is overall promising. It's more promising than most cryptos because it has an actual functioning, working product. I am not confident in the switch between proof of work and proof of stake. There is a strong argument to be had that proof of stake is better, although it means it's much more centralized. It does not use up the unnecessarily large amount of electricity to secure the network. So there is an argument for that. But, you know, okay, so Ethereum, you want smart contracts. That's cool. That makes sense. I totally agree with that. But the real question is, do you want decentralization? Because if you want smart contracts and you want decentralization, switching to proof of stake is going backwards, in my opinion, because you're giving up your decentralization, which it was already not decentralized to begin with. So in all actuality, it's just doubling down on lack of decentralization. So it depends what your argument is. I like the smart contracts. I like that it has a functioning product, a working blockchain. I like that, you know, it's led by a robot. I think that's probably where the future is, AI and robots. But the truth is, I mean, what's your argument? The real argument is for decentralization, and that's what crypto's all about. So we'll see, man. I think honestly I really think something comes along and dethrones Ethereum. But everything that gets made can't be the Ethereum killer and then never amount to anything. Eventually something comes along and dethrones it. But I think that's like 5, 10, 20 years in the future. I think we are still so unbelievably early in cryptocurrency. People don't realize it. They're already buying into the bubble thinking it's going like ridiculously high. I think they're right eventually. It does go ridiculously high. But I think we're all so early that we don't realize there's probably much more bearishness, and the stuff that exists now is probably not going to be who wins this race. I think Ethereum eventually will get dethroned by a legitimate, you know, other project. But do I see anything now that's promising? No, I haven't even heard of most of the Ethereum killers, truthfully. So we'll see what happens. But overall, I do like Ethereum. I think it has a strong, it's one of the strongest cryptos. Again, I think Ethereum, BNB, you know, Chainlink has a good chart. I can't argue for the actual project. Basic attention token has a good working product, but not as strong of a chart. I honestly, I'm fundamentally more bullish on stuff that has working products and has proven itself. So that's why I like Bitcoin. That's why I like Ethereum. That's why I like BNB. That's why I like basic attention token. Uniswap is okay. But again, the fees are just so ridiculous. Try to send Bitcoin right now. Try to send Ethereum right now. Try to use Uniswap. You know what I mean? Like, it's just ridiculous. The fees, they're not functional. So we'll have to see what happens in the future though. Oh, I do remember that. I do remember the old Perth Mint coin. Yeah, I do remember that. It probably sold off like what, it went up like 8,000%. It probably sold off 90% of that 8,000. So it's still up 1,000%. But I do think Ethereum has a promising future, but eventually gets dethroned. But again, that could be 10 or 20 years down the road. So it's probably got some downside in the short to medium term. After that, I'm sure eventually it puts in a new all-time high. I'm not sure, but I think more than likely it puts in a new all-time high. And then eventually I think it just kind of like fades away into a cult coin and something else beats it. Because very rarely is like the first mover the best. And I feel the same way about Bitcoin. Like, it's great and everything, but in all reality, something else will come along eventually and do a better job of what it was supposed to do. And maybe that's the transition. Bitcoin was supposed to be a peer-to-peer payment network, decentralized. Maybe something else does a better job at that, but then Bitcoin evolves into a store of value and it never actually fulfills its, potential white paper promise of being a peer-to-peer, or it phases it out, I should say, because it already kind of locked that down. Bubbly says, can't find it on TradingView. Anthony Ramos says, you should know how to say the last name. Yeah, I mean, can go either way. You know what I mean? I don't like to presume. Seeing this how I'm your only Asian brother. Oh, I see. Okay. All right, I got you. Okay, so let's jump into, see, that's where you threw me off, the Asian and Hispanic, but I got you. Let's go to our commodities and we'll go from there. Gold. So we were talking about this a little bit earlier. Parabolic high, and then basically we have, essentially put in the triple top. I told you we were showing some weakness. I did expect us to get up to 1950, but we are selling off hard and heavy. Was at the top here? Possibly. If we zoom out a little bit and take it back to like our weekly chart and look, I mean, this looks eerily exactly the same as the previous all-time high back here in 2012. We got a parabolic high, came back down, started hammering out a support right here. You could argue it was a descending triangle. Filled out the triangle with that first top, second top, third top, capitulation. Failed to get back up to that top the fourth time when we got back up. And then here, looking at what's going on very clearly, parabolic high, came back down, support, but we put in a lower low here. So, we kind of had that channel going on. When we came back up the first time, we topped out again, and then the third time we fell short of it. So does this just roll over now? We'll have to wait and see. It could go either way, but this looks like a very clear rejection on the TJD, TDMACD. We could not get back above the slope line. We are now putting in a weekly red histogram. I think there's a good possibility that this just, this thing looks like it wants to just pour out here. We'll have to wait and see. I think a lot of people rush into this, like the inflation hedge trade, thinking that we were just consolidating for another breakout. Again, I'm not so convinced. And another funny thing that we've been talking about for a long time, and now all of a sudden I'm hearing all over mainstream media, I'm hearing it like literally all over everything, is we were talking about the inflation versus deflation. Everyone else was sure that there was going to be massive inflation. I spoke about temporary supply constraints that were going to lead to what it felt like inflation, but were not sustainable, that we were in a macro deflationary environment, which we obviously are. And now you're hearing people say, oh, deflation. And then I hear like the stupidest thing ever. People are talking about, well, inflation and deflation are just two sides of the same coin, so it doesn't matter. Well, if you and I bet $100 and we flip a coin, and in midair, you know, you say, okay, call it in midair. And then when it lands, I don't call it. And I say, I won the $100. And you say, how'd you win? You didn't even call it. And I say, yeah, but it's two sides of the same coin. So obviously I'm right. Like it doesn't make any fucking sense. So when I hear people say shit like, well, it doesn't matter, it's two sides of the same coin. That's the dumbest thing ever. It's like you're in your car and you're at a stop sign. It's like, do I go left or right? And you're like, go left. And then it's the wrong way. And I'm like, well, no, it wasn't the wrong way. It's two sides of the same coin. It's left or right, right? It doesn't make any sense. People are so stupid. It's like, just pick one and just be wrong or be right. But don't sit here and just say it's two sides of the same coin. It's either inflation or it's deflation. It's either transitory or it's not. Make up your damn mind, people. You can't be right and be wrong at the same time. So we're finding some support here on gold at the 200 exponential. If this thing keeps rolling over, though, I mean, we're coming back down here to the lows. You know, there's like no support back here. We'll have to wait and see. Maybe we put in, you know, what amounts to essentially a inverted head and shoulders. Here's our left shoulder, neckline, head, right shoulder, or a neckline, right shoulder comes down here. And then we come back up. And then I'll be looking for like that measure move breakout from the neckline. I mean, there's definitely a possibility that we see something like that happening. But again, it's just a possibility at this point in time. It only leads up to like 22, 25. So, you know, at this point in time, I think the gold and silver trade is done. It's going to cool off for a little while. Silver still got that ascending triangle. You know, I think, again, we came back up here to the top. I think we're coming back down here to the bottom. I think we're looking for that retest of the 200 exponential and simple. It's still stronger than gold, but it's weak. It's going to do whatever gold does, just more powerfully. You know, we still got that breakout on the gold-silver ratio. You know, we broke out of our initial resistance. We broke out of our orange resistance right here. We're still consolidating above the top of the range. The real question is now, you know, are we going to bounce this and then get that parabolic move or not? I mean, definitely seeing some weakness in the chart. Maybe this thing rolls all over and just keeps selling off. I don't think that gold and silver can both sell off and silver can stay stronger, but maybe the old silver apes are able to hold it up. I know the premiums are not sustainable. There's no more supply issues. You could argue that there are or whatever, or maybe like they just got to melt down some 1,000-ounce bars and make more coins. I really think this is just a middleman scenario where the middlemen have all like colluded to basically just exploit all the idiots buying silver. I mean, I saw Eagles are still, silver's at like, what, $28? And Eagles are still selling at like a $14 an ounce premium. Like, that's just out of control. That's out of control. 50%. Like, that's crazy. XPT, platinum. Platinum's rolling over exactly like we said. The first measure moves down here to like 1,065. Still expecting further downside. I really am looking to buy platinum at about $1,000 though. I really am. I think that's going to be a nice little wave structure developing here. But we have very clearly broken down from our little micro channel here as well as our macro channel. I think honestly we're going to see some serious continuation to the downside with potential as low as $860. But in all reality, about $1,000 is what I'm looking for. So, USAS, man, this is looking like it wants to break down. We're still at that entry point, but it looks very weak. And again, if silver and gold start rolling over, this thing's going to break down. It's going to break down hard. The measure move on this is like 0. So, ACB, I still think the pot trade looks good. Still forming a nice right shoulder. I think after that nice little move up there, we're getting that consolidation. Really want to see these moving averages hold and then another burst to the upside. Ran into that resistance at 200 exponential. We're still above the 200 simple. I am still massively bullish on cannabis pot stocks. I think honestly the target is still up here at like $35 on this. So realistically, based on what happens here, if we get a little sell-off and put in a higher low, potentially with some divergence, I'm honestly looking to accumulate a larger position along the way up here. We are coming out of the weekly bearish control zone. We got the hard buy signal. We have a very strong blue slope to the upside. We are bouncing it right now, finding some support on the TJD, TDMACD. We're about to cross back over the 0 line. I think this thing kind of goes sideways. The 821, get that cross back to the upside, and then I think we get another one of these like parabolic type moves here. If we get back up, our first main resistance is going to be that 1867, like $19 range. I definitely think it's worth taking some profits along the way when we get to that $19 range, because I think we'll probably get at least a temporary rejection, at which point in time I would expect us to get eventually up to the 200 exponential or simple moving averages, you know, somewhere in between our third trade there. But again, this is like more, it's one of the more weak cannabis charts. Tilray though, I like much more. Still very bullish on this. I think we're getting like a bullish reset. We're basically consolidating. We got the breakout of our little triangle pattern, of our little wedge. We got, you know, all but the measure move here, consolidating above the 0.5 of the Fibonacci. I think we stick it out here long enough, found support on the 0.5, and then see that continuation. You know, it's still possible to come down here and put in a lower low. But again, I'll be using these opportunities to accumulate. If we switch over to longer time frame, let's go to our weekly, take a look. You know, we're basically at the 821 now. We now have everything. We got rejected almost perfectly on the 89 here. We're above all the rest of the moving averages. I think we chop around here for a little bit. We got the hard buy. You know, I think we're getting ready for a parabolic move up here. This to me looks like the 1, the 2, the 3. This is the 4 played out, and now we're getting ready to put in that 5. And you guys know where my target on Tilray is. This is that game changer, in my opinion. I think we're going to get up here eventually to $100, possibly as high as $300 in the previous all-time high. But my main target, based on Fibonacci extensions, is about $1,000 on Tilray. So if we hit $1,000 on Tilray, it'll be a nice little 50x, and we'll probably all be retired at that point in time, I imagine. THCX is basically just doing the same thing. Again, just a little more diversity, but a little weaker. And then YOLO is even more diversity, but even more weakness. UEC, Uranium Energy Core. You guys know how I feel about uranium. I think the uranium trade, the copper trade, I think all the commodity trades are just tired right now. They're a little overcrowded, and I think we see some further downside potential here. There's quite a bit of bearish divergence, and I do expect further downside on this. URA, same thing, bearish divergence, top of the range. You know, same high, higher high on price action. We are above a nice support line, that Fibonacci level. So maybe we hold right here. Maybe we get another one of these like averted 821 crosses. But I think in all reality, we probably come down here. And I'd say we probably eventually test at least that $20 range and the 89 moving average. But we'll wait and see. And then CCJ, Chemical, another uranium stock. Same thing. We're bouncing that 50-55 here, but we're getting rejected at the 821. I think this probably is going to roll over now. We're getting the hard sell signal, a bunch of red histograms in a row. We're losing the slope line. Next target, 1785. After that, 1723. Maybe we get down to that 200 exponential, 1550. I don't know. We'll have to wait and see, but massively bullish on this long term. But again, you know, from where we got bullish was at $10. We're already over 20. It's 100% move to the upside. Uranium moves slow and steady. Copper. Okay, so yeah, we were talking about copper topping out. You know, we've been operating inside of this channel since our low back here at the old Rona sell-off. And, you know, at that point in time, we basically broke down from that channel. We now broke down from it, tried to push back inside of it, got rejected. I expect this measure move to play out. Measure move is going to take us down potentially to that previous little support resistance area. $22 on copper, CPER, the index fund. We'll have to see though. Maybe it doesn't get that low. Maybe it just comes down here, finds some support. More likely though, it probably finds support around like $24. But we'll wait and see. Definitely looks bearish though, breaking down from that long trending pattern. Lithium, again, very bullish long term, but just doesn't look so hot right now. Looks like it's basically putting in a lower high. Getting ready to sell off, leaving the bullish control zone, breaking down. Probably going to see it down here at $63. I think it's probably going to retest these lows back here at like 55. But again, very bullish long term, but all this stuff is just way too crowded. Oh look, lumber did exactly what we said. That's so crazy. Who would have ever thought? So apparently 1,700 per thousand on lumber is just not sustainable. I mean, I don't know. I never would have thought that. Yeah, so we broke down. We were expecting some kind of support at like 1,000 per thousand. Broke down from that. The next target was the 200 exponential at 934. The final target was 862, which is literally where we closed at today. So there's definitely a reason to use the 200 exponential and simple moving averages. There's definitely a reason to use log scale and Fibonacci's. There's a means to my madness, whether you agree with it or not. I think realistically though, 837, there's definitely a high potential. There's a bunch of resistance flip support right here at that area. I think we're probably bottoming out here. I think this is about a wrap. Now the real question is, do we get like, you know, basically like a further sell-off or a reaction rally off this area? Do we sustain here and, you know, this is our realistic prices? I mean, I don't think it's crazy to think that lumber stays at like 800 per thousand or something like that for a sustained period of time. You know, a lot of lumber was sold and is just sitting around at places expecting people to come buy it at ridiculous prices. So eventually the businesses that have all this lumber have to either take a loss or lower their prices, like lower their prices and take a loss, or just slowly grind through it. So, and I just feel like there's no retail demand for lumber. But eventually, you know, people will need to do stuff again, like regular people. We'll have to see what happens with the housing market, though. If the housing market starts to crash and, you know, new home builds do terrible, and I mean, we'll have to see. I mean, it's in all reality, like, we'll see if this level holds. It's definitely a possibility. It's definitely a possibility that, you know, this is our future prices. I think, honestly, we're in a commodity bull market, but we just went too far too fast. I think we got all Icarus and our wings burned off, and we are now crashing back to the earth. Got a little too close to the old sun. Caterpillar, you know, I don't have to tell you guys. It's doing exactly what we talked about. The difference is we talked about it ahead of time. Everybody else talks about this stuff afterwards. I do not think that shorting it is a great idea right now. I do not think trying to pick the bottom is a great idea right now. We have broke down from this massive channel or wedge that we were inside of. At the bottom, we were at 88 bucks. You know, we topped out at 250. There's a bunch of Fibonacci supports along the way. We could easily get down to 189. We could also easily find support at like 206. We'll have to wait and see. But I think it's too late to short it, and it's too early to buy it. That's my opinion right now on Caterpillar. But I do like Caterpillar long term. And then also our moving averages coming in right around the same level, 200 bucks. 200 bucks, I think $200 we get a reaction rally regardless of what's going to happen. And then at that point in time, you know, the real question is, are you going to short the rip? That's the real question. And then last but not least on today's agenda, John Deere, the old tractor, the old mean green machine. Same exact chart, slightly more bullish throughout, and then, you know, looked more bearish there for a while, and then now it looks slightly more bullish. Basically sold off slightly and just kind of going sideways. Does not have a lot of support. I think realistically 293 or 240 bucks gonna happen before long. But, you know, we're down here already in the bearish control zone. Bunch of red histograms though. It's showing no life. Again, I wouldn't be looking to jump in aggressively on this by any means. But, you know, maybe down here at like 308 bucks, 300 bucks, somewhere around there. The old buckaroos. But right now it doesn't look particularly great. Again, I think the infrastructure trade got way too crowded, you know, and I think it's done. I think a lot of these trades have gotten way too crowded, and they're done. Maybe you could argue that about that statement could be said about 95% of the market right now. That's how I feel. And not even just stock market, all markets. I think the easy money has been made all over the world, all over the markets, cryptos, stocks, NFTs, playing cards, like anything you can imagine. The old toilet paper trade, I think, has played out. And I think in all reality, It's probably gonna. There's a lot of new investors, a lot of new money in these markets. I think a lot of it's gonna get drained out through either time or pain. The real question is it going to be price action or is it going to be time? But I think there's capitulation in the near future for a lot of stuff. Now, that does not mean everything's going to be selling off. It does not mean I'm bearish on everything long term. But I definitely think we're going to, tougher times are ahead for the old investors, in my opinion. But yeah, I think we're going to wrap it up there. Anybody have any questions or anything, comments, input, output? Oh, and if you send me a message, I will 100% respond to your message soon. I almost did them today, but I just didn't feel like it's a bunch of them, and I didn't just feel like cut and pasting a response to everybody. Felt a little generic, so I will send everybody a personalized response and instructions further, and we'll go from there. But I do appreciate everybody tuning in today, all the positivity. Good to see everybody in the old chatteroony. And I think that's going to wrap it up. So catch you guys on probably Sunday. I keep saying I might do a stream on Friday, but there's never that much happens between Wednesday and Friday, honestly. And I feel like at that point in time, unless it's like something exciting in crypto, might as well just wait till Sunday because the market's going to be closed anyway. So, well, there you have it, guys. I want to remind you before I get out of here today, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here.